guys, Bill here, and in this video I'm going to talk about identifying key levels and price triggers before trading a stock. Basically, in this video I am going to break down a chart from scratch, picking a name that I've never really traded before, don't ever really pay any attention to, and haven't charted. So I've picked FedEx because it's, it's a widely known name, big company, but I just don't really ever trade it. So I haven't broken down the chart. So what I'm going to do is go through kind of step by step, show you how I identify the key levels and pick places I want to enter and exit trades. I'm going to start with fibs. And one thing I do on all my charts, especially ones I've never traded before, is first I'm going to draw what I call the COVID fib. And the COVID fib is from the lows of March 2020 when COVID started up to, as high as the stock went during that rally. For a lot of stocks, it was their all-time highs. So I'm here on the monthly chart on FedEx, and I'm going to draw this COVID fib. And this is a great way to just find kind of like important sort of big time frame levels, right? And anytime you're trading, intraday, if you get near one of these levels, there's a really good chance it's going to be support or resistance. So you can even see here, this is a big uptrend. So what you're looking for on an uptrend fib is when price starts to retrace, is it going to hold key spots? So the first real key spot on this fib would be this 197.93, which is the start of the golden zone. And look, it wicked below it in a little bit right here, but basically it's holding this 50 area and you get a little bit of a relief bounce before it ends up just dying down here. But another thing I'm going to do looking at this monthly chart is this is a nice little downtrend, right? So I'm going to draw another fib from all-time highs up to where we started to find a little bit of support down here and bounce a bit. And you'll notice that I draw these different colors and different sizes. So this is the thickest line because it's the strongest. It's the longest amount of data, right? And I make this one a little thinner so that I know it's not quite as much data involved in that. And with this fib, we'd be looking at places where if FedEx decides it wants to keep rallying, where it might reject. So this is a great example right here. Like if it was to get up to here, I'd be kind of interested in possibly playing puts, because it's that start of that golden zone, kind of like where we bounced here on the uptrend. We might reject there, going back to continue the downtrend. And it also is converging really nicely with the 382 COVID fib. All right, so these are longer time frames. Now I'm going to kind of dig into the daily and start looking at stuff here. Oh wow, look at this huge gap, right? I love using gap levels. So I'm going to make sure I mark that. Some people, and I just recently did a video about this, but some people mark from the wick of a candle, and some people mark from like where it opened or closed. I tend to do the open and closed. So I'm going to mark those. All right, kind of zoom back out. You can see that once this gap happened, it was rejected a bunch of times, rejected. And then finally it gapped over it and started getting into it. Okay. And now we're about 2/3 of the way into it. So that's something to keep in mind. If I was interested in trading FedEx, I'd be looking at, it doesn't want to fill this gap. Also, when it gets to the gap, it's probably going to reject it. That's very common. We have the COVID 50 fib up here. A lot of stuff going on up here. A lot of potential resistance up here for FedEx. All right. You can also start drawing trend lines. I'm not a absolutely huge trend line guy, but this is a pretty decent little trend here. We're nowhere near touching it or anything like that, but that's something you can do. I'm also going to want to, and you can draw shorter time frame fibs as well. So we're on the daily, so you might, look at, let's say, you might want to draw this kind of gap fib. So where we came up here, you could use this high point and this low swing and encompass that gap. If you wanted to go long FedEx back here, that's where you'd kind of be looking. Where it finally broke out into the gap, you'd maybe be looking there for calls. If you're a swing trader, you could try to play it that day as well, based on, other key factors, flow and news and things like that. And then you may want to have a fib that's taking into account this kind of mini downtrend or this gap down to find places, good places on the way up to scale. All right. But we're already worked most of our way through the gap. So I'm not interested in that right now. But one thing I want to do that I am interested in is I want to look at different things like gammas and dark pools. So here's TradyTix is what I use for my flow data and different things like that. Here are some gamma exposure levels, and I have different specific videos that talk about what these are. I'm not going to waste too much time on that, but basically I've laid them out here: 200, 190, 187, 175. You can see here that around 190, 187 are these two gammas that are pretty close together, and then besides that we have gaps, above and below, and you can kind of see how the price action has sort of coiled here right around these two, the closest gammas. So 190 and 187, I'm definitely going to want to make notes of that. And 190 is a negative gamma level. So I use red for that. And 187 is positive. And I use green for that. Okay. So because our price is trading pretty close to these zones, this is where I start to think about triggers, right? So I'm going to get a little bit more, micro involved here in the recent price action. We're sort of in a bull flag. We've made a big move up here, and now we're kind of consolidating and flagging here. I always make sure that I mark the high and low of the previous day. So, this is a Sunday. Let's pretend that maybe we're getting ready to trade FedEx on Monday. I want to know my daily highs and lows. And the daily high where it rejected is sort of the top of the flag. There's a little bit of another level there. You might want to mark like as a shorter, as like a initial small target. I would do something like that potentially. Make it just a minor level, kind of fade it out. Just if we're going to break over high a day, sometimes that's a good trigger. Your highs and your lows of your days to go long and short. So looking at FedEx, I think that's what I'm going to want to do. I'm going to want to say I'm interested in going long on a break over high a day. And I also am looking at these gamma levels and trying to decide which one I'd like to use the best. Obviously, we're close to this 190. We've come up through it. We've confirmed over it a couple times, but then we keep getting back under it. Is it that reliable of support? I don't know. It doesn't really look like that reliable of support for like a great, pullback entry, but this 187 positive gamma kind of does. If you look, once we got over it in the flag, we held it there. We held it there. We did get under it, but that's a gap down and came right back the next day, closed at it and ripped through it. Holding it there, holding it there. This would be what I'd look for on a big pullback, maybe intraday. That's where I'd probably want to look to take calls with the best risk to reward possible. Okay. And now I kind of have my little zone here. And you can play the zone as well. It's a $6 range. That's pretty good on FedEx. You can see most of these candles are easily fitting inside this range. So if we were to get a move up to test the high a day, you don't have to necessarily think, oh, just because this is my quote unquote call trigger, I need to be thinking only about calls when I'm right here. Actually, in this market where breakouts and breakdowns are less reliable, it's actually better to do the opposite. You're looking for both opportunities, but you're not trying to get too biased. We're moving up here and price starts to look weak. Maybe we get some wicks over on like the 15-minute or whatever chart you're using intraday and it fails. Puts here would be nice, especially, check your flow, check different types of things. What's SPY doing? Is SPY at major resistance at the same time FedEx is? Then that's a pretty good opportunity to go short. And then you could target, 190 here. This gamma could be a great scale spot. 187, major target where you're looking that maybe you get some support based off these wicks on the daily chart. And, it's the same idea when you come down to 187. You don't 100% want to have tunnel vision on, I need to go short right here, because look at the wicks, right? If we do confirm under, especially on a higher time frame, 15-minute is great. If we do confirm under, then you got puts and you got lots of room down to, other key levels. Okay. So, those are like the main types of levels I'm going to draw. I'm also, I'll also draw when there's big spaces in between my fibs like that. If I haven't already done some like shorter time frame fibs, I might just do traditional like hand drawing of levels, right? So in this flag, that's kind of a rejection, a nice little pivot spot. I'm looking at places where price pivots and also can be confirmed by other places on the chart. So look at this candle. This is right where we closed or opened, and then we rejected it super hard that day and just faded, right? And then we bounced from there. That is resistance turned into support. So that's a nice daily level for me. It's on the daily chart. So under 187 on puts, this would be a great price target. Above 193 on calls, I'm targeting the COVID 50 fib. And there's going to be places in between. Like, these are big moves. I'm talking about like, the absolute, you'd have your runners targeting this. Obviously, you're scaling along the way whenever you're happy. And you might scroll back and see, these wicks down here. So you say to yourself, okay, this could be a nice little initial target on some calls. I'd even be scaling a little bit here on the wick of the top of this consolidation zone in the bull flag. And that's really how I do it, guys. And the same thing, under this level, you got like a minor level here where we rejected on this move up, and also we opened a candle right there. So just places where there's been interactions a few times. And the more times you can get a candle that has wicks off of it, closes or opens right at it, the stronger that daily level is. And in those cases, sometimes I'll make the line thicker. Like if this line had 3 or 4 touches, I'll go like that. Or if it's a weekly level, I'll make it bigger. All those types of things, just to remind myself, which levels are strongest and encompass the most data. But that's pretty much it, guys, as far as, if I'm breaking down a chart for the first time, I'm trying to identify where the key levels on this chart is, where does price action respond the best, where can I get the most reliable entries and exits and price targets and things like that. If you have any questions, let me know, leave a comment. You can find me on Twitter. I also have a Patreon now with a private Discord if you're interested in learning more about this types of stuff, in addition with daily watch lists, the SPY Blueprint, which I'm starting to post on Twitter now each Sunday, once a week. All that stuff's available in there for $50 a month. Just let me know. I'm always here to help with any questions, guys. Thank you.